Hello, everyone. Thank you very much for participating in our webinar. It's a great honor to have with us Mr. Roberto Campos Neto, who is the president of the Brazilian Central Bank. And it's a privilege for us as Brazilians to have someone with very strong academic credentials, but also a man of the markets, which is, I think, a great combination for a central banker. Before joining the central bank, Mr. Campos Neto had a very distinguished career in the financial markets in Brazil at Bozano Simonsen, and lately as a treasurer of Banco Santander. He was also elected, let's say, as the best central bank in the world by the Central Banking magazine. He took office at the beginning of 2020, appointed by President Bolsonaro, right before the pandemic. Very tough times for central bankers and for policymakers. Brazil did economically very well during the pandemic. The economy did much better than expected, contracted much less, and rebounded much faster. And when we started to see some signs of inflation in Brazil, the Brazilian Central Bank was one of the first, was very fast and agile in raising rates, and therefore was also one of the first to lower rates. So again, it's a great privilege to have you here, Mr. Campos Neto. This call is focused mainly on international global institutional investors. So what we'll do, we'll try, Mr. Campos Neto is going to make like 20-30 minutes introduction with some slides and a presentation, and then we'll open up. Actually, we have some questions, 4 or 5 questions. So Mr. Campos Neto, thank you very much again, and the floor is yours. Thank you.
Well, thank you, Florian. I wanna say thanks to Constellation for putting this together, and I see here that we have 143 participants. So thank you all for sticking with us today. The idea is to go through a presentation that is a standard presentation, but I'll kind of twist more to what I think would be more interest for you in terms of knowing about Brazil. So I'll share a presentation here very fast. And well, I think we need to always start these presentations talking about global inflation, and I think that was one of the important differences that we have among central banks in understanding the collateral effects of everything that was done during the pandemic. So we had unprecedented level of impulse in terms of fiscal and monetary at the same time, more than 4 times bigger than what we had in 2008. And we were able to avoid a depression, and we end up with a mild recession. But then we had to deal with the collateral effects. So when we look at global inflation, you can see that the picture is very different from advanced economies and emerging markets. Even though the inflation effect was the same, I think energy was more persistent in advanced economies, and that has to do also with the price of gas in Europe. But also, I think one thing that people didn't notice was that we had this shift in the demand for goods while in the pandemic, because people had no mobility, and because we had the shift in demand for goods in exchange for services, because people were not consuming services as much, to produce more goods, uses more energy. And I think part of the imbalance in the energy market started from there, and then we had the consequences that we all know. When we look at food and energy inflation, I think it's important to see that we do have convergence in most places. Now we started to see that this is accommodating a little bit. Food prices also slightly higher when we look at recently. We are in a process in the central bank here to talk about food inflation and to see what and we see that some of the actors are revising slightly higher food inflation, and it's not only happening in Brazil. I was looking at other countries, and it's the same is happening. But when you look at this graph that shows the temperature anomalies, we can clearly see here there is a tendency, because as you look at the lines, you see that the same colors tend to almost make like a rainbow in a way that the current years have had more temperature anomalies. And if you look at 2023 and 24, it stands out. If you were only looking at excess rain and floods and things like that, it would look even more exponential. So, and that's the things that affect a lot Brazil and affect food. So we look at this and we ask ourselves, what are we in terms of tendency from here on? When you look at service inflation again, emerging markets have had a convergence. Colombia has been a little bit of a laggard, but most emerging markets have had some convergency. But the labor market's tight in most places. So we worry whether this will translate into service inflation, or whether that explains service inflation is still running higher than target in most places. But when you look at emerging markets, it's a level of price that we saw in the past. Whereas when you look in advanced economies, it's very, very different. The picture is very different. It's much higher than what we've seen in the past. And you can go back 10, 20 years, you're not going to see level of service inflation the way we're seeing right now. When you look at U.S. inflation, I think we stressed for a long time here. And I remember at the turn of the year when the market was pricing between 6 and 7 cuts in the U.S., we were asking the question of where this inflation is going to come from. And I must say that for a while we had a difficult time seeing the cuts in the curve, because we are not seeing where this inflation is going to come from. So the usual suspects were housing, slack in the labor market, the disinflation in imports from China. So we look at the things that people are talking about, and we didn't see that was actually very impactful. And we're still looking at this, saying where the disinflation is going to come from. I think we are seeing a slowdown now at the margin in manufacturing, but still strong numbers in labor and strong numbers in services. So we need to see, and that's not only US. It's not only US. I mean, it's common to in many different countries. In terms of pricing, I think your investors, know that by heart. The only thing that I think is interesting is how advanced economies kind of follow the pricing in the curve that we had for US. Emerging market did so, but to a less extent. And when you look at the emerging market countries, when you look at emerging market countries, you see that also you have most countries embarking in a movement of cutting rates. There was also the number of cuts was also following a little bit the pattern that we saw in the United States and the expectations. But I think overall here, we have a similar effect in most places. A lot of places you have manufacturing slowing down a little bit. We have service inflation still running higher compared to the target. We have labor markets that are tight. You have real estate markets in most advanced economies that have not actually eased that much. And the fundamental question remains, which is, if rates are so high, how come financial conditions appear to be so loose? And I think that's what I think a lot of the central banks are asking themselves right now and trying to understand why is it that the market is living with high levels of interest rates in a much different way than it was expected. Again, when you look at monetary policy, here are the curves. You probably have seen that a lot. You see that you went back to from almost 2 cuts to something close to 1 cut in the US. And again, when you look at financial conditions, you look at the black line here, you're very close to what we consider somewhat of loose financial conditions, regardless of interest rates. I think again, you are international investors who follow that very closely. Also, the fact that equities are not doing so well in some emerging markets, but US is a different picture, and I think the more technology you have in your index, the better you're doing these days. And I think it has to do with this also perception that technology will influence the service sector in a different way, and it has much more leverage on some of the companies. And in the case of Brazil, we don't have a lot of technology companies in our index, but again, we will talk about that later. In terms of growth, I think the revisions have been on the upside for a long time. When you look at the expectation for 2023 in December and compared to now, we see that, by and large, we are better than expected. Again, the economies have proved to be resilient in the face of higher rates. And again, we have a big difference between services and manufacturers everywhere. US activity, I think here the graph that I like the most is probably this one on the right, which measures from the beginning of the pandemic what happens to services and goods. And I think that is also responsible for, I think, why the reason why a lot of the central banks had an interpretation that the inflation was going to be very temporary, because there was a perception that there was a dislocation between consumption of goods and services, and that will get into an equilibrium, going back to the tendency line, which is the dotted lines, very fast. That never happened. If anything, what we saw is a permanent shift in the demand for goods. And even if you look at the breakdown into durables and non-durables, you still see that it was more or less similar. And then now you have a situation that not only you have this permanent demand, the shift for goods, but also services are going above the trend line. So again, the economies are strong, and we need to understand how this process of the disinflation is going to take place. In the case of China, we worried a lot for a long time on the investment in real estate. And here in the Central Bank of Brazil, we used to follow that very closely. And it was always a puzzle for us, the fact that we had we had investments in real estate with huge drop, sales with a big drop, and price of real estate are more or less stable when you look at residential. And that was a puzzle, because it's difficult to see a pattern like that in other places. And we wonder, what was behind that movement. What we saw was a big shift from real estate, from investment in real estate, into this manufacturing services. A lot is directed towards electrification, and we can see that if you go around here in the streets in Brazil, you're going to see a huge number of Chinese cars that are coming and taking the market very fast. But at the same time, we're seeing the number of trade restrictions against China is increasing a lot. So I think we question ourselves, can it be the case that China will have excess capacity, and that will start affecting the model they're trying to transition to? And in terms of labor market, again, good news all over the place. We try to see where are the places in which you could explain that using productivity. Not a lot of places you can do that. Probably US, you can do that to some extent, but it's very debatable at the margin. But we look at unit labor costs and productivity, and when you look at OECD, and that's the graph on the right here, you see that you still have this idea, even though it's not happening mechanically right now, that at some point in time, this very tight labor market can influence service inflation in a way that will, pose a threat to the conversion of inflation in the medium term. One other thing, when you look at the cost side, is fragmentation is probably a major problem that we have right now, is adding costs to the productive side. We talk to companies here in Brazil, and we look at the surveys that are done in other countries. A lot of companies are reporting that nearshoring, friendshoring are not so simple and are not so cheap compared to what it was expected. We see some investment going to Mexico. In Asia, you see what's happening in Vietnam, but overall, this is happening at a higher cost. At the same time, We also see, when you look at the green transitions, what people are telling us is that the green transition is a very important thing. We need to do it, but it poses a challenge for companies in the short term because it means higher costs. Even in the central bank here, we had a meeting the other day. How can we make, for example, the delivery of bills greener? And it was much higher. The cost was much higher because we need to change the trucks and change the way we do a lot of things. And so it's very important. We need to do it, but it also poses a pressure on the production side. And when you look at global exports, we see that except for digital services, we're not seeing a lot of growth. One of the things that I've been saying for a while right now, it's been like probably 9 months that I've looking into that, is that if you look at the global debt, 2/3 of the global sovereign debt is US plus Europe plus Japan. And the cost of rolling over 2/3 of the debt has multiplied by 3. The cost was 1.1, the aggregate a year, and now it's close to 3.3. That's the last time I saw it. And so we wonder, how come 2/3 of the global debt costs almost 3 times higher to roll over? What's the implication if that is to last for a longer time? What's the implication on liquidity for markets? What is the implication for emerging markets? And I think that's more or less the challenge that we're seeing today. And that's why I think you're seeing some questioning on emerging markets today. And the reality is that when you look at the deficits, they're very high. I think we paid a very high bill for the programs that were done to face pandemic. There was a very easy and good coordination between monetary policy and fiscal policy going into the pandemic. That's not happening as smooth as it was needed on the way out. So we see monetary policy reacting, but we still have a lot of loose fiscal policy out there. Here, I'm not talking specifically about Brazil. I'm talking globally. When we look at the cost of servicing the debt in the US, this graph is clearly shocking. And but for us, it's not the US. What happens in the US, that's a problem. For us, it's more understanding what's the effect of that for emerging market countries, for lower debt, for lower rating debt, corporate debt in EM, and things like that. So we do think that this is something that we need to watch. When you look at the risks for global economy, more and more we see that high inflation is still number one when you look at the surveys. And that has not eased. I mean, we have data, I think, in the US pointing to a slightly retraction in terms of the manufacturing side, but we do have strong data on labor, we do have strong data on service, so we're still watching how that develops. When we go into Brazil, we are in a process of converging inflation. The last number came, the last 3 numbers came out a little bit better than expected. The last number had an improvement in quality because we were looking very closely what happens to service inflation, especially the service inflation related to labor-intensive areas, and that came a little bit better than expected. We are doing this intense work to try to dissect everything that is part of the service component to see if there's a correlation between the intensiveness of labor and the adjustment in prices, and we haven't seen that, but we do acknowledge that the labor market in Brazil is very tight. We just had an unemployment number of 7.5. That's record low for a long time, and we also trying to understand what are the components when you look at the core inflation, when we compare, for example, food at home, industrials, and underlying services, what we see. And here on the graph of services, you saw that there was a pickup, and now there is a movement on the other way. We also, like I said, look at inertia in sensitive, lag sensitive, and labor sensitive services, and then we try to dissect that. So when you look at labor intensive services, we see that again we had a pickup, and then more recently we had better data. But again, when we look at the current inflation, I think the picture is not very different from what we expected. But we have this phenomenon in Brazil, which is And it hasn't happened many times in the past, which is you have the current inflation behaving more or less as you expected. Obviously, you always look at the scenario looking further, and there are risks to the convergence. But overall, the current inflation is, I would say, converging as expected. But when you look at expected inflation, is started to de-anchor. And in our last official communication, given the movement that we saw, we changed the wording for partial anchored to de-anchored, and partially for that reason, we decided to change the pace that we were going in, and basically from that point on, we had, and these movements usually happen in tendencies. We see that the continued de-anchoring of expectations. When you look at the surveys, it shows that clearly. When you look at break-even inflation, you also have the same picture. So we have this de-anchoring happening. When you look at the pure risk premium, which is the long end of the NTN-Bs, you see that they're very high. It's trading as high as 6.3, which is a lot of real rate when you think about the importance of that element to price stability of the debt over the long term. When you look at economic activity here, we have nothing but good news in the last couple of years. We have revised growth upwards in the last 3 years, beginning with very low numbers and increasing the numbers. I think it's safe to say that structural growth in Brazil is slightly higher. How much higher is hard to pinpoint at this time. The IMF came out with an idea that our structural growth has gone from 2 to 2.5. The market is rising upwards. I think this here we have a cumulative effect of all the reforms that we have done. When you look at the time that takes to open a company, to close a company, the labor flexibility, a lot of these things show up when you look at anecdotal evidence, and it points to a situation that probably is pushing the structural growth a little bit higher. So that's good news, and we haven't had that for a long time. And then we have to talk a little bit about what happened in Rio Grande do Sul, which is a lot of rains and the flooding, and how much that impact can be actually measured as of now. So for you to have an idea, that state is 6.5% of GDP, but it's almost 13% of the GDP in the agricultural side. It's 9%, 8.6% of trade balance, and it has a weight on the inflation index that is shown here. Again, that's an approximation. You could have some deviations from that. Here, I would say the most important thing is looking at the food prices and try to see if, how relevant that is. Luckily, when the rain came, most of the harvest in rice, which is a very important thing, and is mainly produced in the southern part, most of the harvest had been done already. So the question is, if you have damage in the soil for the next years, and how much that can influence the price of foods. And here, when you look at oat, rice, and wheat, it's very relevant to the production of this state. When you look at the manufacturing industry, you have a lot of footwear and tobacco, but again, we are trying here to see what is the effect that can have in the macroeconomic variables. And it's not only the short term. We are trying to see if the rebuilding of the state takes longer, what that can mean to the equilibrium. Again, labor market is another very good news, like growth, and we are very low unemployment. We haven't had an impact in the service inflation from that, so far it's been good news. We have had, when you look at real earnings also going higher, that explains why growth is so much based on consumption of families. But again, we need to see productivity, because if we see consumption going higher without productivity, at some point in time, we will hit the inflation button again, and that's what the central bank always tries to anticipate. This is just a statement of the Copom meeting. One other thing that I see people debating a lot is the level of real rates in Brazil. And when you look at real rates in Brazil and compare to advanced economies, yeah, we are much higher. But when you look at what it was in the past, we had a tendency to work with real rates that are much higher compared to advanced economies than they are now. And when you look at emerging market countries here, I'm looking mostly at Latin America. Brazil is kind of much closer to the peers than it was in the past. When you look at 10 years ago, 15 years ago, 7 years ago. And then on the right, what we did is an ex-ante real interest rate, looking at the difference between Brazil and the peer average. And you can see that throughout the cycles, when you look at the history, we have been able to work because of the reforms that the country is doing with lower and lower real rates, even though it's still high and it's still probably the highest, but that difference is going lower throughout time. So people talk about the fact that N10B is 6.2, but if you go, a while ago, that traded for a long time between 12 and 13%. And I remember because I was at the market at that time. And that shows that when we put things in the perspective, and I think things are, when we look at and remembering that you are more long-term horizon investors, I think things overall are converging. And one thing is that the reforms that Brazil have done and the institutional gains, they haven't reverted. So there's always some temptations throughout the cycles to revert gains. But I think by and large, all the institutional gains that we have achieved have maintained and to some extent have even improved. So again, talking about real rates, the important comparison is not just to compare real rates, is to compare what we call monetary effort, which is the real rate, the difference between the real rate and the neutral real rate. And when you look at that, you see that Brazil is not very far from the advanced economies, and actually it has a looser situation than most countries in Latin America. Why? Because the neutral rate in Brazil is higher than most other countries. And that's something that we need to understand and we need to address it. It's going lower when you look at the tendency over time. But when you look at the short term, it's going a little bit higher again. So we need to understand and to address that. And that's, I think, very important to understand. And then to finish here, Brazil, the fiscal is always a source of concern. I see that investors talk about that a lot. The government has changed the fiscal targets, and that created some uncertainty in the market. We haven't seen that when you look at the surveys. We haven't seen that in terms of people repricing the fiscal numbers altogether. But when you look at the assessment in a qualitative way, and here we have the surveys, 79% of the people said that they have a perception that fiscal got worse. And when you look at the primary deficit, also people have a perception this is worse. So I think the question here is how do we address the fact that we need to show investors in the longer term that we can have a sustainable trajectory of the debt. And remember, we saw that for advanced economies. The fiscal is horrible everywhere, including in emerging market countries. Brazil has decided to put a fiscal framework, but what the market is doing is questioning the ability of the government to stick with the fiscal framework. And I think it's not the job of the central bank to go into that. The importance for us is not the fiscal itself, is what fiscal means to the macroeconomic variables that are important for our reaction function. Credits, again, credit is relatively benign. We are seeing numbers that are actually going a little bit higher. The delinquency rates have gone a little bit lower. And so even with higher interest rates and higher real rates, the credit market is very functional. When you look at the credit market in terms of capital markets, we are having record year after year. When you look at the debenture market, it's booming. So the financial deepening in terms of credit in Brazil is growing by more than any other emerging market country, except some places in Asia. But I think it tells us how strong the capital market has been. The same is not true for equity for different reasons. But when you look at the debenture market, again, 2024 is painting is shaping up to be a record year again. The secondary market going higher. When you look at spreads, they're well behaved. So I'll just go to the technology agenda very fast here because it's very important for us. This is something that I think Brazil is on the very frontier, and I don't see this what we have right now. I don't see in any other country, which is finally we're seeing a lot of the blocks that we plan, gluing together. So we have the PIX, which is our rail of payments, which is the most successful payment system out there globally. It has included 70 million people into the bancarization. We have a block in which we change the laws in terms of remove bureaucracies for internationalization of the currency. We are now in a phase to connect different payment systems. Our open finance, which is the widest that we have out there, and it started to show that it's very beneficial for competition and for people in general. And the DREX, which is putting everything that we made in a tokenization framework with a DLT, which will make the Brazilian currency the only one that is a full DLT digital currencies. The others are basically a mix of centralization in the central bank with DLTs that are basically used for messaging. Here we're talking about the full DLT systems. We don't have that in any other place. And we're also adding artificial intelligence and data monetization to what we have been doing. Some data from the PIX here. I will probably concentrate here on the graph on the right that shows how bancarization has increased when we introduce PIX. I just got the number that we broke record, and we did 206 million transactions a day. We have around 105 million people that are bancarized. So that's more than one transaction, almost 2 transactions per bancarized person per day in Brazil. That's like 3 times higher than India, for example, that has a system for much longer. Again, we have 71.5 million new users with PIX. The internationalization of currency, again, we have solved most of the barriers that we had. The technology barrier, especially connecting DLT and centralized system, that has been solved. The liquidity token pool will solve the settlement issue that was a problem for a long time. And now we are working on the governance, and we are designing the G20, this taxonomy, so that a group of countries can have common taxonomy to advance on that issue. The open finance, again, the data is there. We have more than 74 billion calls, API calls for people requesting data, moving data. We are already having the effect of people saving like more than 10 million reais just for getting message saying, you have money parked on your account, move to someone else, you can get a remuneration for that. So it's optimizing the way people see their finances. So we have here some numbers. Incumbent financial institution, 1 billion in credit with portability, 700 million just done in being able to increase the customer credit limit just by knowing data that is shared on the platform. I won't have time to go into every detail, but here I probably think it's important that this number, people save 8 million. It's a little bit higher now from paying overdraft interest on another financial institutions. So that's the other day I got a message saying, you have money parked in your account, you can do that. So again, this is bringing competition. This is bringing products that are more tailor-made for people that have special interests. So I think that is, and again, all this is going to actually end up in a marketplace of finance. So you're not going to have an app for every bank in your cell. You're probably going to have a marketplace of finance, a place in which you migrate all your data. And in that environment, you can compare the data, you can change, and you can have immediate comparability and portability of products and services. And the DREX also very fast here is in the pilot stage right now. We have 3 dimensions of, I think, improvement. People concentrate a lot on the dimension of the programmability of money. But also, I think there are other 2 dimensions that are very important. One is the bank efficiency, because remember, our digital currency is a tokenization of deposits. So banks will start looking at assets and liabilities in a digital way, not in an account-based way. And I think that introduced a lot of modernization to the banks. one other thing is we have a huge change in terms of efficiency in contracts and registration. Today, you have a lot of friction in that, and you have to pay a lot of money to register a contract. That can be done almost costless in the future. And all you need to have your contract is a printer at home. So that is really putting efficiency into that. I will skip that a little bit. But again, we are talking about a Hyperledger bezel, which is a DLT that we chose. And we are now trying to solve, this problem of having scalability, programmability, and privacy at the same time. So this is where we are right now. And again, this is at the very frontier. And this is what I think it is going to look like in the future. You're going to have one app, and you're going to have bank A, B, and C. You can have all your services. You can decide whether you want to have your money in a physical account or in a digital account. We can have the open finance, which will get all the message that you have from banks in terms of services that are being offered, things that we can change from one side to the other. You're going to have the consolidated financial position, and you can actually simulate with that. And you, for example, if you have a portfolio of equity sitting in a bank, the other bank can send you a message saying, you know, if you transfer here, you have a better price for custody and things like that. That works also for insurance and some other things. And we're going to have a connection to a data wallet that's being built so that you can monetize your data. That's already in the process of being built. And also, we are thinking about how can we put artificial intelligence in that to optimize people's life. Here is what we are thinking in terms of the financial services that can be propelled by artificial intelligence. The data monetization, we have companies that are working on the digital wallet concept. I think that is advanced very, very fast. And to end up the presentation, we are doing our tech sprint that is basically going to look at technology and finance and try to solve more problems related to ESG and how we can do that. And this is something that we are doing in the G20. Thank you. So now I think we have time for questions. Thanks for bearing with me.
Thank you, Roberto. That was remarkable. Thank you. I think that it's remarkable how sophisticated the central bank agenda is and how this translates into innovation, and Brazil being really at the forefront of innovation in financial markets. Given that there may be higher fiscal deficits globally for longer, maybe higher inflation for longer and higher interest rates, I think that in the minds of CIOs of sovereign wealth funds, endowments, pension plans, there is the question, so what's the role, or is there any role for the emerging markets in their portfolios still, and especially Brazil? So I think that's one question, which is why emerging markets and why Brazil in this environment? Would you have any comments or any thoughts on that?
Yes, I think that when I get together with the central banks from other countries, it's very interesting because I end up thinking that advanced economies are looking more like emerging markets these days, and emerging markets these days are looking more like advanced economies. When you look at what happens during the pandemic, advanced economies spend 25% of GDP. Emerging markets, on average, spend 10% of GDP. So emerging markets, which are always blamed for doing a much worse fiscal plan, actually behave better. And on the top of that, I remember talking to a very famous central banker and complaining about the fact that, and it's from a European country, I was complaining that the fiscal is so loose in some of the advanced economies, and he said the optimal program is called 3T. And at the time, the concept was 3T was a temporary, target, and tailored. I guess looking now from where we sit, we didn't have any of the T's. All the T's, I think, got lost along the way. And I think in emerging market countries, we did better in that sense. On the top of that, I think when you look at what drives growth in the long term, you do have technology that is an effect that is probably propelling a lot of what's happening in the US. But I think when you look at demographics, I think emerging market countries sit in a better position. So I would think that emerging market countries now more than ever should have a place in the portfolio. And I think it's up to us, and especially in the case of Brazil, to explain better what we are doing and to explain that Brazil was the only country that did reforms during the pandemic and advanced reforms and still doing reforms. We are doing a tax reform right now. And it's probably one of the countries that we see structural growth going higher. We don't see that going around that much. And so I do think that there is a place, and I do think that it's bumpy, and probably because of higher rates for longer in most places, we need to have a more longer term view if you want to see the broader picture. I think we are on mute, Florian.
I'm sorry. So you mentioned a longer view. You had the privilege of sitting on both sides of the table as a market participant, investor, right? And as a policymaker. And from a policymaker perspective, when you look at markets, the volatility, the expectations, how they change, what would you, if you, by any chance, become an investor again one day, what would you do differently once you sat on that side of the table?
I would probably ride better through the noises, because being on that side here, you kind of see how the cake is baked, and seeing that, I think, puts a different perspective. I always say to my friends traders, you can't imagine what you can do with your mind when you don't have to look at a screen all day long, prices going up and down. So I think it puts us in a different perspective. So I probably would change that. I also would look more at try to anticipate things in a longer way. I think markets is very focused on the short time. And on the policy side, I think one lesson that I would learn, and I don't think all the policymakers have that, especially central bankers, is one, look more at the signs that the market are giving you. Don't fight the markets, and understand what they mean and try to explain. And also to understand better the role of expectations. Markets are very much based on expectations. And I think sometimes the policymakers, they try to confront too much expectation and don't understand that by doing that, actually they are making things worse. They need to accept, understand, explain better. And on that sense, I think communication is very important. Sometimes you can get damages in policies just because you're not communicating right. Sometimes you're doing right things, you're not able to communicate right. So I think improving communication is key.
Great. And going back to emerging markets in Brazil, you mentioned the reforms, right? From an international investor, in some emerging markets, there were really permanent losses of capital, like in Venezuela a couple of years ago, maybe Argentina until recently, Russia for sure. There is this question mark on China, given some government intervention in some industries like private education. But Brazil has always been very robust. And we Brazilians, we are very almost confident that there is no risk of permanent loss of capital here. If you could just elaborate on that from a Brazil perspective, how robust we are and the policies and so forth.
I think first, the institutions in Brazil are very strong, and I think they're much stronger than any of these places that you've mentioned. And I understand Argentina is doing a huge effort now trying to rebuild. And for us, Brazil is very important that they do well, because it helps us our growth here. So we are trying to help them as much as we can. But I think we have stronger institutions. And also in the history of Brazil, you can look in the past, we have done a lot of changes in trying to improve governance and improving framework and improving the strength of the institutions. And there's always a temptation along the way to challenge what was done. But by and large, I think this hasn't happened. And we can, for example, look at the autonomy of the central bank that was done after 40 years, and the fact that we did a labor reform and we did a tax reform and we did a reform that changed a lot of things in the infrastructure space. Some of these things happened in the middle of the pandemic. So I think the equilibrium in Brazil sometimes looks like it stalls things a little bit, but at the same time, it's stronger than some of these places that you mentioned. And if you look at the Congress in Brazil, the Congress in Brazil has always been center. You can move from a little bit center left to a little bit center right, but it's more or less center. So it almost serves as deterrent to any willingness that you could have to change institutions, to weaken the institutions in the longer term. So I think the system in Brazil is such that sometimes you don't get progress very fast, but when you do get the progress, I think you are able to sustain that. So I wouldn't think that we are at the risk that you mentioned compared to these other countries. Yeah.
Great. And from talk about risk, what do you think are the biggest risks for the Brazilian economy going forward in the next 2 to 5 years?
Oh, I think the perception, the bigger perception of risk in Brazil is related to the ability to engage in a system in which you have harmony between monetary policy and fiscal policy. That is what people concentrate more on the short term. I think the big challenge that we have is productivity. When you look at productivity in Brazil, you have had increasing productivity in the agricultural sector, but other than that, and it's true in some other yams, it has stalled. So I think the question is, we focus too much on the short term, and I think the important things that matter are sometimes things that you do today and you don't see the effect in the short term, but eventually they have effect. For example, now we are seeing that unemployment is low, and we are seeing the labor reform that was done a couple of years ago having impact still today. But when you did labor reform the year after, people are saying, "Oh, we didn't have a great gain from that," but sometimes it takes time. So I think those things are important, and productivity is very important. And on that, have all the things related to education. I think people are seeing the workplace in a different way. A lot of the jobs that are being created are related to technology. People are working for Uber or iFood or things like that. We need to understand how that happens. And I think one thing also that can improve a lot the government services is we can do more government services at a cheaper price, at a higher efficient with more technology. And the PIX is an example of that. So PIX didn't cost that much. It cost like $3-4 million. And it completely changed the way people see payments in Brazil. And that generated inclusion. That had a huge impact on the efficiency of the economy. And it's not very expensive. So I think one thing that we need to concentrate is to have a more technology, digital way of thinking, more modernized in terms of government to think, how can we use technology to improve people's life?
Yeah, and just one last question, because when one looks at the Brazilian financial system, the banking system, and the new banks, the incumbents, the stock exchange, it's really very robust, right? The system. And I just want to come, how important for the central bank is it to have such a robust financial system? Because sometimes for investors, they don't have the understanding how strong and robust we are, and how, I would say, safer compared to other countries we are in that regard.
Yeah, when you look at a longer term view, what we did have is you have a moment in which all the countries stimulate a lot of the competition, the banking competition, and change the laws to make sure that the smaller banks had access to credit and they had access to funding, and then it had 2008. And in 2008, what actually a lot of countries did collectively was they accepted to change robustness for concentration. So they said the system needs to be a little bit more concentrated, because we need to have a more robust system. And the fact that you had a lot of the small players in the crisis of 2008 showed that had. And I always thought differently. I always thought that you can do decentralization, and you can improve concentration without affecting the robustness. But for that, you need a lot of planning, and a lot of technology has to be involved. And you can lower the barrier of entry with technology in a way that you can reduce concentration, improve spreads and the quality of services, and actually increasing the bancarization as a whole. So the bigger banks are not going to be smaller. They're going to have a smaller part of the pie, but a much bigger pie. And I think that's what we were able to do in Brazil. Brazil, I was just looking at the numbers last week, was one of the few countries that actually promoted, we have less concentration right now. The indexes of concentration are falling in Brazil. So we have new players that are actually gaining momentum. They're more related to technology. That doesn't mean that the bigger banks are doing worse. Quite the opposite. A lot of the bigger banks are doing very well, and everybody's embracing this technology change that Brazil is doing. And what we see at the end is more segmentation, new services, more people included, and more products that will be tailor-made for people to do better in their financial lives.
Great. Just one last. So we don't know. Nobody knows who the next president of the central bank is going to be. If you would leave him a message, and you probably will, right? A paper saying, "Look, what should you do and what shouldn't you do?" What would that message be? No one knows who it's going to be, and we only know by the end of the year. But what would you leave him as the do's and don'ts?
Oh, I would probably tell him that I think the technology agenda is very important, and that has proved to be very beneficial for the society, and that is only the beginning. We can do a lot more with that. I think we are only seeing the tip of the iceberg there. So I'd probably say that technology is a cheaper way to promote inclusion and to improve the financial market. And that has many dimensions: the tokenization, the digitalization of services, the more integrating different countries. The second thing I would probably say is that there is always this challenge, because you want to be close to the government, but you want to preserve your independence. And it's a very fine line, because sometimes you are close in the sense that you participate in the meetings and you talk to the government, but you need to understand that that is only so good as far as you have independence when you do have to take a decision, and sometimes it will be not what the government wants. And so the right, preserving the right, and being able to say no at times when the government wants to do different things, sometimes because the political cycle is different from the monetary cycle and from the cycle that you need to optimize. So I'd probably say that's the second thing that I would say. And the third thing that I would say is communication is key. And in this era that we have, which everything is communicated very fast, you need to be transparent. You need to communicate well. You need to have a process in which you have transparency on what you're doing. People actually understand the process, and you can actually communicate things in a way so to reduce the noise as much as you can. So that's probably what I would say.
Great, wonderful. So, Mr. Campos Neto, thank you very much again for your time. It's we did some webinars. We did it with the Paulo Guedes, the former Minister of the Economy. We did it with Marcelo Barbosa, the former head of the SEC in Brazil. And it always impresses foreign investors of the quality, if you will, of the policymakers in Brazil. So we really have global class leaders and global class policymakers. So thank you very much again. There's a saying in America that's, look, when someone sees a veteran or a active, let's say, military people from military, say, look, thank you for your service, right? And we don't do this in Brazil very often. Maybe we are not that patriotic as some Americans are, but we should do it. So again, thank you for your service.
Thank you.
You will be missed. And again, thank you for our clients, and I hope it did help you with your investments in Brazil. And again, thank you very much, and good luck, and stay up worth. Thank you very much.
Thank you, everybody, for participating. Thank you, Florian, and have a nice day. Thank you.
Bye-bye. Bye-bye.